One trade can change everything.
Hello everybody, welcome to today's tutorial. We're going to be taking a look at the Bybit user interface and the settings that I like to use with it in relationship to the risk management tool that I've shared with you guys recently. Okay, and for those of you that don't know, if you go ahead and click the link on the description for my website, memorylock.io, I do have available a free risk management tool, as well as 2 tutorials on risk management and a walkthrough on how to use that tool specifically. And you guys will see that a little bit in this video too. I also do have a partnership link for Bybit. If you guys go ahead and click that link to sign up, not only do I very much appreciate it, but you can also get some rewards. For example, if you deposit $3,000 and trade $6,000 in volume, you'll get $100 as a reward in return, right? And that reward goes up to 30,000 USDT, so that's pretty sweet. So with that said, we'll go ahead and dive right into it. Bybit does have a lot of great features: spot trading, derivative trading, copy trading, so on and so forth. But today we're going to focus on derivatives. So if we just go ahead and go over to here, click on USDT Perpetual. This is where I spend 99% of my time on the website. And you can go over here, select all of your assets, go ahead and favorite them by clicking the stars here to create yourself a favorites list. And the other thing that where we'll start is with, of course, leverage, which is what attracts a lot of people to these exchanges. Is they offer up to, in Bybit's case, up to 100 times leverage, right? So we'll go over here and you'll see that there's 2 different kinds of leverage. There's cross and isolated. Now with cross leverage, all available balance in the corresponding margin account will be deployed to meet maintenance margin requirements to prevent liquidation. Okay, so that's a fancy way of saying if you risk $20 here, see, as you can see in my derivatives account, I have 100 USDT. If you risk 20 USDT for, let's say, a long trade on BTC, and you get liquidated on cross, you don't just lose the 20 USDT, you're actually going to lose your entire available balance. So I would lose all 100 of my USDT, not just 20. Okay? Whereas if I go to isolated, let's say that I risk 20 USDT on a trade and I get liquidated, I only lose the 20 USDT. I don't lose the entire balance. So that would leave me 80 USDT left to take additional trades, right? And now as a beginner for trading, you're oftentimes going to get very emotional when your P&L goes red. You see a huge candle that goes in the opposite direction of your trade, and you may get a lot of emotion to try and save your trade instead of just letting it go. Well, if you do not use proper risk management with the stop loss or anything like that, and you're trading on cross and you let price go to your liquidation price and you see yourself get liquidated, you will lose the entire balance here. Versus here, if you let your trade get liquidated instead of using a stop loss with proper risk management, you're only going to use the amount you risked. In this case, 20 USDT, not the whole balance. So I always trade on isolated, and I recommend, especially if you're a beginner, to use isolated as well. Okay, so we'll go ahead and make that change. Next, we're going to take a look at this calculator tool over here. You can calculate profit, loss, target price, liquidation price, entry price. In this case, we're going to focus on the liquidation price. But first, we'll go ahead and hop over to our chart. I have a kind of a trade set up here. I would like to see price kind of come down, take out this low, which will give me my entry. I'll have my stop loss below here, and I'm going to be targeting this high here for my take profit. Okay, so what does that mean? Our stop loss is 20,315 about, and our entry is about 21,300. Okay, my take profit will be about 25,300. All right, so we'll go back to our risk management tool. Again, I'm not going to dive in too deeply on how this works or how to use it. I do have tutorials for it on my website, memorylock.io, so feel free to check that out, okay? So from here, I have my starting balance set to 2,500 with a set risk of 2%, all right? So we'll go to our risk, or our entry here, the date. Our asset is BTC. The trade is a long trade. The entry is 21,300. The stop loss is 20,315. And this gives us our position size of 1,081. Okay, cool. That's great. So we'll go back to our calculator and let's see how much leverage, up to how much leverage we can use. So if we go ahead and add a 10 quantity BTC, this actually doesn't matter. You can put any value in here. And the entry price is 21,300. Our liquidation price would be 19,276. Well, our stop loss is 20,315. So this would be an acceptable amount of leverage. Now let's just say, for example, we wanted to use 20 times leverage. Well, the liquidation price would be 20,341. Well, that's above our stop loss, right? So we can't use this high of leverage because we want the stop loss, we want the liquidation price to be below, in this case for a long trade, below our stop loss, right? So in this case, we know that we can't use more than 20 times leverage. So let's pull it back to about 15. Perfect, that is below our stop loss. All right, so now we know that we can use 15 times leverage, so I'll go ahead and put in 15 leverage. That's what I'll use. And now from here, we'll set up a limit order, right, for our trade. So our order price, again, is the 21,300 entry that we were looking for. And here it says order by quantity. Now this is another setting that we're going to change. Okay, we're going to go ahead and click this, say order by value. All right. And here, if we go to our risk management tool, we can see our position size based on our calculator here that we used from starting balance, our set risk. Our position size for this specific trade should be 1,081. So we'll go back here, right? And we'll enter 1,081. Okay. And then we'll go down here and say buy long with take profit stop loss. Our stop loss is going to be 20,315. And then our take profit, you can go ahead and enter that value that we had talked about, 25,280 or so from our take profit there, but I actually prefer to use limit orders after the fact. So with that said, we have our order price, our order value, and our stop loss. We'll go ahead and hit purchase. We'll double check to be sure everything is fine. Confirm. And now from here, we can go over to active. So this is an active open order that we have. If we go ahead and take a look here, we can see that that order is active for down here at 21,300. Okay. Now something really cool I want to show you guys is if we go ahead and click here at our stop loss, you can see it's set to 20,315. If we go ahead and click this here, you can see that when your stop loss is triggered, your expected loss will be 49.25 USDT. All right, let's take a look back at our risk management tool. Based on our starting balance with our set risk of 2%, we're only ever risking up to $50, meaning if our stop loss is hit, we should lose no more than $50. Well, by following this entry, this stop loss, and using this position size calculated with this tool here, we can see that if our stop loss was hit, we really only would lose just less than $50, right around 50 USDT, right? So we can see just how valuable and how useful that can be there. Now you can also go to, if you wanted to cancel this, let's say, we can go ahead and cancel it. You could also do this on market if you wanted to wait for price to come down here and visit, around your entry at about that 315 mark. You can go ahead and wait for price to come down there. As you guys know, I prefer market orders. But again, I'll do this exact same thing. I'll say, I'll enter my order by value. I'll still follow, even though I might not get exactly 21,300 entry, still around there, right? I still intend to use this order value. And at times, maybe I'll do it in two separate orders. Maybe I'll change this to half and say, 540. So then I can do two market orders down here at two different times. And nonetheless, you could still go down here and say buy long with, your stop loss set for the 20,315, right? So doing this, basically what I wanted to do is just to show you guys just a couple of these settings in here that I really suggest you use just kind of how to take this trade setup, enter it into the risk management tool, get your position size with your stop loss and entry, and then convert that to, a real trade. Okay, so that's kind of how we do that, right? We would have it set to order value. We want to switch this to isolated. We use the calculator to determine how much leverage we can use in order to do that. And then we go ahead and we execute the trade. Okay. So I hope you guys enjoy that. Oftentimes people focus way too much just on technical analysis and on finding, groups with signals and can you get me this long trade? When should we be trading? What trade is next? We focus far too little on risk management and proper position sizing, which will actually allow you to be profitable over time rather than just, trading and winning and losing, or slowly winning and then blowing up your whole account, right? So do check out the risk management tool. I would appreciate it if you guys do check out my sign up link. Again, you do get kickbacks for that as well. And, take into consideration some of the settings that I showed you in here today. Be sure that you're always using a stop loss, the proper amount of leverage, calculated by this tool here, and as well as the position sizing suggested by the risk management calculator.